Hey traders, welcome back. It has been a few weeks since I've done my monthly review or weekend review, so sorry about that. I've been kind of busy and things have been topsy-turvy in the market. A lot has gone on. I don't want to go through each and every trade I've done since then, but basically the gist of it has been, March I did pretty well, 65.78, and then April was a down month. I lost almost $1,000, 942. So far this month in May, I'm doing pretty well, 6107. And what's happened in April was the market's been pretty topsy-turvy. Typically, you can see all these are marked in pink, and that's because that's telling me that I'm trading these calls below my cost. And so if I get a sign and these get called away, they won't be called away at the price that I bought them for. So I keep a close eye on the pink ones to make sure. So the market, I've been assigned all these various stocks at one point or another, and the market has gone way down because of the tariffs and things. So I'm trying to eke out some premium, but it's very risky, and everybody, all the gurus will recommend against it. So I'm not doing what you're supposed to do here. So don't do this kind of thing. And I'm kind of learning, typically like this one in blue, this is my kid's trade, teaching her with $1,000 how to do a put. So like the strike price was $650. The price at the time was $881. The delta was 0.9. I collected $10 for that. And basically what you can usually do with a put is, let the time decay, go all the way to the end, and buy it back. So that went from $10 and the price of the option went down to $1.04. And so bought that back and ended up with $8.96 and doing some more trades. Here's some more trades that I'm just tracking on a separate sheet there. But like for instance, IWM, I'm trading these against my leaps. If the price goes up against you, my strike price was 189. The current price at the time was 179. So this is a call, pretty safe delta, but the price, the market's been pretty volatile and it jumped way up and started to go above my strike price. So I didn't want these to get called away as 400 shares. So I bought them back for 228. So I lost like $40 there. Then the next day I did another trade. This one actually did time decay, and so there's 400 shares here. So I bought these back for $1 each. And so originally collected 136, bought them back to close it out, 132. So I'm just showing some examples here of how topsy-turvy the market's been. So that one turned out okay. But then like this one here, these are the big ones that kind of wiped me out, like this trade. IWM, pretty safe delta, 113. It wasn't very likely the price is going to go against me, but I think I closed this out like on the 9th. Strike price was 183. The current price at the time was 179. It was only a 13% chance that this is going to go in the money and go against me. But let's look at the market and see what happened for last month. The 9th was the day, I believe, Trump had instituted tariffs and stuff, so the market was going really down, really bad. And then on the 9th, he announced that there's going to be a pause, and so the whole market shot up quite a bit. And I'm trading these against my leaps. So this was I would have had to buy 400 shares at 18,300 each. So that would have been like 72 and some change, $72,000, 73,200 to be exact. And I didn't want to have to do that because my shares would get assigned. I'd have to buy these. I don't own the shares. I've got leaps on them. And at the time, my leaps were underwater. So these are things you should not do. And it was cheaper for me to just buy this back. It cost me $36.72. So I ended up with just $34.40. So that was a big hit. So all these other trades I had going, I was already up at the point 1897, and this one wiped all that out plus some and started to crawl things back again. Then I had the same sort of thing happen for this SMCX trade. I had 600 shares. I've been trying to dollar cost average. At one point, my cost for SMCX was like over $100, and I tried to buy more shares at a lower price to get my average down. Let's look at SMCX. My cost now is $74.51, so it was still too high for me to make a decent premium unless I sold at a price that was below my cost. So if these had been called away, I would have lost a ton of money. You can see right now on this account I'm down $17,780. So if I sell these today, that's how much I would lose on this. But the market has gone up quite a bit. At one point, this was down like $30,000. So these are the ones. This is another big one that kind of wiped out a lot of my profit here. This NVDA, I had 200 shares, and again that went against me. So I collected 172. I rolled this. It cost me 974, and then in the next month, May, I rolled it out here. So I collected 1480. I rolled this again. It cost me 2350, and rolled this down to here. So I ended up with a $2,400 premium there. So it's looking like it's in the positive there, going the right direction. But basically, what you don't want to do is I'm trying not to do this anymore. Is sell below my costs. I'm just gonna let the market start to come back up, and it has. And so like this SMCX has started to go up again. The market's starting to go up, and I collected $2,040 for this last one, because SMCX is now, if I go trade options, if I go sell call at the next expiration, and I go up to my cost was like 78,000, I believe. So I went up to 80, and I was able to collect 380 times 600 shares. Whatever, it's not it wasn't 380 at the time, but ended up being like $2,040. So that's good there. The market's gone up enough for me to make a premium and be above my cost. So my cost is 78. These get called away. I'm happy. That's fine. I made $2,040 and a little bit of appreciation. So try not to do any more of those trades where I'm selling below my cost. So far this month, things are looking pretty good. This TQQQ, I did have to roll that one. That was the one that was still left over that had to buy back, or I rolled it out. So I rolled a couple of these like way out to just, I kind of said, F it, and I didn't want to have to fart around with these and hold them. So like this NVIDIA, I've got 200 shares of this, and I did a covered call on it, but I rolled it way out to like 1017. Right now it's May 17, so to be able to collect a decent amount of premium, I went way out, but it is above my cost. So the strike price is 130. My cost is 127.81, and so at the time of expiration, if these get called away, if the price is above 130, then I'll be happy with that. That's fine. Same with TQQQ. Had to go way out to December for these, but I haven't seen, in the past year, that this is going to get above my above my cost. My average cost is $85.96. It's actually kind of touched on that in February, but it's been down, and I didn't want to have to sell below my cost, so I just went way out on this. Let's look at TQQQ at an $85 strike price. So I'm just going to wait and sit tight. I collected a decent amount of premium, $629 times 3. So let's look at that. collected 1887. This NVIDIA collected 2400. Gotta wait a long time for these, but I'm not going to worry about these possibly being called away at below my strike price. So far this month, that's good. That's some good premium there. And then this SMCX, hopefully that goes up. Amazon, I've got, won't go over every trade, but collected a pretty good amount of premium there. And as you can see, these ones in progress. I did a put on NVIDIA here. That expired. The market's gone up, so I felt pretty good about that. Amazon, what did I do? I did a call at 202.50. Oh, the price was 204.70. I decided to sell a call pretty close on the money at 202.50. I had seen things are kind of starting to downtrend, so it was kind of like an well, this was an in the money covered call, and when you do that, you get paid the extrinsic value, which is the time value, and then there's the intrinsic value. These are rough numbers, but it's the difference usually between the price and the strike price. So at the time I looked this up, these were the values. So if this expires worthless, I'll get all of this. If it expires in the money, then I'll just collect the extrinsic value, which isn't too bad. But the price of this has gone down now to like pretty much my strike price at 202.06. So it's looking like I might just this just might expire worthless, and I'll get all this premium, and then I can do it again. Let's see what else. That's about it. I guess the word of advice is don't try to sell below your cost if you're doing covered calls, because it can come back to bite you pretty bad. Last month was bad, so it's a risk. It's hard to resist trying to make a little bit of premium, but in a normal kind of market, that might be an okay strategy if you just keep an eye on things and buy things back quickly. You can just always make it up again, do another trade by buying it back, closing it out. But things are so volatile right now with the tariffs, and there's a pause in tariffs right now. Another 90 days. There's no real deal like with China, but the businesses can't really plan, so things are very volatile. They can't plan until there's actual deals in place, and businesses know that the cost of their goods coming into the country, import and export, are going to be solid, something that they can rely on. So pretty happy this month so far, 6107. So this is the real world. This is me trying to do the best with the knowledge I have, and share that with you and share my journey. I'm not some guru that's going to pretend like every single trade I do is perfect and make money every single time. Try to sell you a course or something like that based on that false knowledge. There's a lot of just fake gurus out there. So hopefully this helps and you can use it in your own trading. If you got some value out of this, please hit the like and subscribe, and we'll have more videos coming out next week. Thanks for watching. Talk to you later. Bye.